Welcome back. You're tuned into Editors Roundtable. Well, we're turning the spotlight on Sanjiv Goenka companies. Remember, he did an interview with Shireen Ban here on CNBC-TV18, and from there, well, the stock market has got a little bit excited, at least on a couple of the companies that he is heading. Let's run you through a few details. First, the entire piece comes up. You have the power and utility company, you have the KPO that he runs out there, the largest carbon black company here in India. You have the music library as well, the retail venture, as well as the holding company. So that's basically the entire bouquet of companies that Mr. Goenka does head. The street actually got excited with that one statement that he says he believes the entire market capitalization of the group will go to around 2 lakh crore odd. Currently, it's around 72,000 crores odd. So the aggression that, the street has read it as a rather aggressive statement. As of now, 71,000 crores is the total market capitalization, and bulk of it comes in from CESC, from Firstsource, as well as PCBL. And both these two is something that the street is quite optimistic on. Let's focus on PCBL first. The margins have improved gradually over the last few years from around 14%. It's come up to around 16%. Profitability as well has gone up big time, from around the 300 crores all the way to around 500 crores. But what he said was he's expecting margins to improve even more. He's talking about 17 to 18%. And he's saying the profit number from 500 crores, it could go up nearly around 5x. Now, those are big and tall targets. If you look at the Bloomberg estimates, then on FY26 numbers, the stock is trading at around 22 times. But if in case the profitability goes up by 5 times in the next 5 years, then it's at around 7 times odd. So that's about PCBL. Moving to Firstsource, that's been actually an underperformer. It's not grown as much as the market. The street has been quite disappointed out there. But they have gotten a new CEO last year. And earlier, he had roles at Tech Mahindra as well as Infosys for more than 10 years. At Tech Mahindra, he was heading their BPO division, and he had reported very, very good revenue growth of close to around 20%. So now the street is optimistic that maybe, in fact, this growth that is looking quite subdued over the last few years, barring the COVID period, maybe Firstsource can continue to grow from here on. And one of the things that they have done is they've gone ahead and they've upped their guidance. They've upped it for the current year to around 11.5% to around 13%. The long-term margins, they are talking about going to around 14-15%. And if you look at the valuation parameter, even after the recent run-up, it trades at around 25 times. So that's on Firstsource as well. Moving to the other piece that we're looking at, this is an interesting one, because the other way to play Firstsource is play the holding company. So RPSG Ventures, it has close to 50% stake in Firstsource. That's valued at roughly around 11,000 crores. The IPL franchise as well, 51% is held under this franchise. And the football club, Mohan Bagan as well, is under this one. They also have a group of FMCG companies, and 3 of them come up for you in the street. And I understand that as of now, 2Yum is doing revenues of close to around 1,000 crores. So that's the holding company that they have as well. Scaling up of the retail business is going to be interesting. For the last few quarters, they haven't got past that 550 to 600 crores. Margins have been very, very minimal or absolutely zilch as well. So that's a smaller part of the business. The street believes that as of now, the market capitalization of the entire group is around 70,000 crores, but they have taken note of that target of around 2 lakh crores odd. So let's see how they get there. But those are the broad companies that he is heading. PCBL and Firstsource, I'm going to keep an eye out on both those two. Well, Sandeep, I'm coming across to you then with regard to this group. I'm not sure whether you have a view on the group or any of the companies, but sometimes when promoter entities start showing aggression, that's one of the first indicators that maybe, in fact, things are turning. Your comment on it.
See, I will not comment on individual names, but I say some of these companies were trading in the neglected zone for a while. It got neglected, and you have seen in last round, all neglected stock have rallied a lot. But generally, as a student of behavior finance, we'll take a with pinch of salt when people talk very aggressive, Okay. Suddenly, very aggressive numbers come into picture. From a behavior perspective, we'll look for some amount of caution. We should not get carried away. Because execution is the key, because making statement is very easy, but we have to see how well they can execute. But generally, I like to be cautious about such statements. Okay,
all right. So very cautious. Sandeep, I wanted to ask you about the metal pack. We spoke about currency. We spoke about growth as well globally. And irrespective of how good balance sheets are, we know a lot of these metal companies, the balance sheets are very good. And you've got a couple of those very, very well, particularly PSU government-owned metal companies. What's the view at current reckoning? And some of these PSU metal-owned companies have corrected from the top. Your view on it?
So, Nigel, if you look at it in isolation in India, looks very good. Entire material space, because India is growing. You can't grow.
But the global factors are worrying.
The only problem is global factor. And I will like to remain slightly cautious from a near-term perspective, because when we're saying that global volatility is going to expand further, and if you're talking about a risk of dollar index spiking, okay, with that background, it will be premature to take a very aggressive view right now. I think they have done a great job in last 2 years. From January, February 2023 have been rallying. Okay, I think if it's good, if they get into some sort of correction and consolidation, which is the case, and when this global volatility settle down, that's a time I would like to add big time in our portfolio, because we have pruned down a bit, but we are not negative from a structure point of view, but purely cautious from a very near term. And I say near term, just a quarter perspective, maybe 2 months perspective. Once this global volatility does settle down, we will relook this space again.
And the view is for the market also, I mean, it's near term. The cautious view is a quarter long?
Quarter sort of thing, you can say. One has to be cautious, because very difficult to see how exactly it plays out. So when we talk about, let's say, India, per se, we are very, very convinced about India long-term story. But from a very near-term, very short-term perspective, I will play it safe. I don't want to be, is samay Shivaji nahi banna hai. That's the way I look at it. It's better to protect the capital and survive this phase. And then I think everything looks good to me after that.
Absolutely. Sandeep, great conversation, and thank you for dropping by.
Thank you.
Thanks a lot for calling us. Okay.
Well, I think
it's time to wrap up this edition of Editors Roundtable. More news and updates on the other side.